Good morning, it's Jonathan Barrett with the morning debrief. It's currently the 28th of September and it's 7:28. Positive night for the Dow last night and also indeed a positive night for Europe. The Dow did, however, suffer a short sell-off towards the close, but we'll talk about that a little bit later. Seems to me we've got a certain level of optimism concerning the Greek sovereign debt. We also had the approval of a property tax in Greece. That certainly helped the market along. I guess the idea is that Greece is actually making those measures and as such will be awarded with another bailout. It's a little bit ironic though that the market tends to rally when you're continuing to feed the fire. So a little bit of an issue there. I think one thing that's worth mentioning, and we have talked about it in the weekly bulletin, is the fact that Italy's debt needs to be rolled over by the end of the year, the 2011 issuances. So that to me is something to focus on. We did spend a little bit of time on it in the weekly bulletin, but just as a brief, they've got to roll over about 260 odd billion euro, and if they don't get any buyers for their debt, then surely they'll be looking for a bailout too. That will only apply more pressure on the system. So keep an eye on that space. That is basically occurring over the next couple of days and indeed twice a month until the end of the year. So that's a bit of a curveball, which we've got to be mindful of. Okay, let's have a snapshot through what's been happening out there. Rubini, well, Rubini's always Rubini. Throes of economic contraction. Well, we know that as well. We didn't have some very positive numbers last night, economic numbers in the States as well, so that was a little bit of a concern. We had a good move, I guess, when looking through it. US crude oil rises the most on European efforts. Equity markets go up, crude goes up. That seems to be the state of play, and that just seems to be normal. Consumer confidence stagnates 2 years, and US stimulus needs housing effort. We had those poor housing data the other day. So still concerns out there. There's no doubt about it, but let's have a little bit of a regroup as to what the rest of the markets have been doing. Just first of all, stock futures. You can see that Dow up 1.33%. The Dow up 1.33%. I might actually go back and have a look at the indices because that'll give you a bit more of a clearer picture, because the Dow's now trading the new market, the new futures. Dow up 146, the S&P up 12, Nasdaq up 30. Top 50 was up 110. That's 5%. The FTSE up 4%. CAC was up 5, and the DAX was up 5.229%. All exceptionally aggressive. There's no doubt about it. And one has to think whether is it the low? I don't know, but I actually tend to think that it's there's still a little bit more around the corner. The market wants to take it that way. The S&P, the SPY was up 28 points on SICOM, 4,061. Okay, let's have a look at the commodity prices. And it is quite good to see that we have a lift in some of these commodities, particularly crude oil. We've always noted that crude with a 7 handle on it is positive. That's been the case once again for those lucky enough to pick it up at 77, 78 the other day. 83.72 up 4.34%. Brent's up 2.97%. And natty gas up just on 1% at 381. On the agricultural front, all green except for lumber, which is good to see. Of the movers, obviously cocoa up 1.61%, and all the others relatively stable. Good to see wheat up its lows at 1.44%. Copper strong night up 4.17% at 342. Gold strong night up 3.5% at 1651, and silver up a whopping 6% at 31.94. It's amazing that you think that those markets move, liquidations, and then all of a sudden they bounce back. Anyway, that's the way it goes at the moment. Okay, let's have a look at some of the other markets, particularly the currencies. And Aussie seemed to be a good bounce, 99.05. I think any pullback back to 98 is worthwhile having a look at. Dollar yen, good to see a little bit of a bounce there, 76.78. Need to see a break up through that 77, certainly through that 78 area, but been very steady and only ever comes in with sellers when we get up through these levels. Dollar index you'd probably appreciate with stronger equity prices under pressure, and that's the case. We did see it come back. We still think that's a temporary reprieve and still like dollars as far as it goes. The local market, 4060, good strong move up 28 on SICOM, I guess expectations are that that pullback to this trend line, I think, is good. So 4,000 once again becomes the important level to focus on, and obviously 338, 38.20 is the key on the downside. So it looks like we've got a bit of a low there. Looking at some of the others, let's have a quick look at gold in terms of the way it's trading. A big bounce from there, consolidation. Look, if you want to buy it, I think it's keen to buy it on a breakthrough at 1675, or else you're looking at about 1600. I think that's the immediate range for it. So have a look at there. I still think there are major concerns out there. I think the interesting thing here is that the September 2008, the $200 sell-off. Now, we had inherent problems in that, and that seemed to me to be margins just getting out of the way. People going to cash, people nervous. But then we saw this build and this gain again. So I think it's similar because we've seen a massive sellout. All the week longs are out of the market. Well, in fact, I think a lot of longs are out. So there is a higher propensity now for it to start to trade higher, given that we really haven't solved any of the problems. So when I look at it from that perspective, you know, I think that it can start to gravitate higher and continue. So stay close to it because I think that's a key there. It certainly feels as if it still wants to hold on to these gains. Okay, let's have a look at the economic calendar now. And let's go back Wednesday night. There we go, just slowly coming in. HH new home sales in Australia, so see what happens there. Bit of a mixed bag in terms of data, but durable goods orders and capital goods orders, etc., they'll be the major ones. The durable goods orders will be the best one. The market is looking for a fall in durable goods, down up 1%. The previous was up 4%. So we're expecting a little bit of nervousness around there in the market. Overall, I guess CPI data out of Germany around the regions I think is relatively important, and there's quite a bit of data out there in Japan. So I guess there's quite a bit to look into it, but I just reiterate the fact that there's still big problems there. So I don't think we should get aggressive about buying equities at the moment. It just sort of thinks that we're getting through there. All we're seeing is movements in the right direction, but Greece is still a problem. Spain's still a problem. Italy's still a problem. And do we have enough funds? And we haven't even heard of, you know, the correct package that I think they call it the Triarchos put together. That's the IMF, the European Council, and the European Central Bank. So there's still a lot of problems out there. But anyway, let's see how the market unfolds. At the moment, the favour is buy, but I wouldn't be aggressive about buying too much. That's it from me. Have a great day. Happy trading. We'll talk to you later.